Welcome back. As promised, let's shift our attention now to the commodity markets. Manisha is now with us. Manisha, hi.
Hi, and thank you for that. Well, I'm looking at metals as an overall sector, but within that as well, copper specifically, because we've been looking at prices continuing to decline with the kind of declines that we have seen for the month of June. We've basically cleared out what we saw as in sense of gains for the month of May. So the prices have declined to nearly 2-month lows, and this is on the back of strength that we've seen come back in case of US dollar. Not just dollar, the bond yields have been on the higher side. The US business activity data came in at the highest in 26 months, and that's seeming to put some pressure on various dollar-denominated commodities. When you look at dollar itself, well, we have seen the Chinese yuan decline to a 7-month lows versus the US dollar, and that is pretty much the case in various other Asian currencies. We saw rupee hit an all-time lows in the previous week. You have the Japanese yen, which is trading at an 8-week lows versus the dollar, and the pound sterling as well has continued to decline. That one is trading at a 5-week lows as well. So when you look at the copper prices itself, we're down 1% on the week already. Last 1 month, it was 8.5% of a decline coming in from its all-time highs of $11,000 a ton. We're down by 13% right now. As I said, the way the copper prices have been in the month of June, we've erased all of May's gains and much of April gains as well. The markets clearly seem to be reacting to this one thing. So when you look at the surplus, Jan to March of a quarter, the surplus was 299,000 tons. For the month of Feb alone, it was 191,000. We are looking at the surplus quantity continue to go down. So when you look at March and when you look at April at 13,000 tons, you really do know on why copper hit all-time highs in the month of May, because by then we saw the surplus continue to decline even further there. Well, the future trend does seem on the higher side, because if you look at the markets, the demand on the longer period does seem very important. 115% more copper is going to be required for next 30 years. This includes conventional, and then of course you have EV demand, hybrid car demand. All of that is going to use a lot of copper there. Availability of ore is going to be one thing. That is something that the markets are talking about. If you want to see the kind of demand that we are looking at and in sense of supplies, you'll perhaps need 55 more mines, and that is a premium we are looking at in sense of prices right now. There are operational setbacks in Chile's Codelco. There is smelting output that has seen a decline of 5 to 10% come in for China. That has been supportive. And the markets do believe that with the kind of fund movement that we've seen in case of copper, the longer term, especially, the copper prices will stay supported at around $9,500 a ton going forward as well.
Okay, Manisha, thank you very much for that. Copper always making headlines there. Get into